Hi, my name is Sam. I am a financial educator at Northern Communities Credit Union, and today we're just going to be talking about a more serious topic, managing money during financial hardship. Financial hardship is something that can happen to anyone, and I wanted to take a moment to say that we're here to support but never judge. As an educator, I want everyone to succeed and be able to enjoy life. And when discussing how to make it through hardship, there's going to be easy advice I can give, but there's also going to be things that we'll talk about that's much easier said than done. I'm going to point this out as we get there, but I did just want to take a moment to say that it can truly happen to anyone, and no matter how much we plan, there's things that can always come up that we're just not expecting. And it can feel really isolating in the moment, but please know that there's so many people out there that both understand and want to help. Before we get into everything, let's just go over a few of the goals of this video. In this session, we're going to explore practical strategies for managing finances during uncertain times, including how to communicate with lenders, prioritize bills, and make borrowing decisions that aren't going to impact your credit long term. The hope is that these strategies and resources will help keep your financial health strong during the hardship so the recovery is easier. So, with that, let's get into it. Uh, First, let's go over some resources. And because this could be a presentation in and of itself, we just decided to highlight NCCU specific resources as well as listing a community resource finder. The resource finder is a great way to find and get more information about the various programs and resources within your area. You'll enter in your zip code, and then you're going to be able to sort resources by categories like food, housing and utility assistance, transportation, health, childcare, you name it, there's a lot of resources out there. As far as NCCU resources go, I just wanted to highlight four different things that might be very helpful in going through financial hardship as well as after. You can find all of these on our website or give us a call to learn more at 218-279-3200. Financial counseling can be really, really helpful during times of hardship, especially if you're looking for help in creating a temporary budget, a plan for your credit, or even just someone to bounce ideas off of that isn't directly impacted by the situation and can provide unbiased and expert advice. MoneyEDU is our free online portal for all things personal finance. There are hundreds of courses, articles, assessments, tools, budgeting templates, pretty much everything personal finance. I highly recommend checking it out. Again, you can find that on our website. And in addition to educational resources, we also offer loans and programs that both help during that crisis as well as afterwards. We offer hardship loans at a lower rate than a traditional unsecured loan, as well as a great credit builder loan program with credit cards, auto loans, and even a savings loan, which are all geared towards helping you build or rebuild your credit. This might be a really great resource to look into after you're went through the hardship and are working on getting back on your feet. Our lenders are also all certified financial counselors, and they're going to work with you on coming up with a plan that's best for your overall financial health. They don't make commission, so know that there's not going to be like financial gain on their end for them, working with you or advising you on a certain product or service. So if you're currently struggling, I do highly encourage you to check out both what we offer at NCCU, but also the other products and services in your area that can help you. Just scan that QR code or go to the resource.findhelp.com to get connected with those. Because we mention it a few times throughout the presentation, let's take a minute to just talk about the benefits of financial counseling. It is truly something that every person can benefit from, and there's resources for people at every stage of life, like whether you're moving out for the first time or preparing for retirement. We really work with everyone. The sessions are oriented towards your individual goals, where we explore options and resources and then create a plan of action to get you to where you want to be. And whether it's to help come up with a plan during the financial hardship or something else, financial counseling is a great place to get confidential and judgment free advice and resources. And the service is completely free. So let's explore some ways to protect your credit and overall financial health during a crisis. The first piece of advice is that communication is key. Your lenders will want to work with you, especially if you're going through a hard time. And if you call them as soon as possible and explain your situation, there's normally going to be various options that can help you relieve some of that financial strain during the hardship itself. You're going to want to make sure to get any options in writing for your records, just in case there's any discrepancies or late payments reported to the credit bureaus despite the agreement, because then you'll have proof and it'll be easy to correct that. Again, communication is key here. If you are able to let them know ASAP what you're going through before you miss a payment, there's typically going to be a lot more options available. Particularly with mortgages, if you wait to contact them until after you miss the payment, there's probably going to be less they can do to help. So the sooner you talk to them, the better. Here are four types of advice that your lender may offer. Some of these will act in similar ways, allowing you to skip payments while you get back on your feet, or potentially lowering your payments temporarily. I also want to note that other bills and expenses that don't report to the credit bureaus, such as like utility companies, phone companies, insurance, a lot of times they're also going to have hardship options of some sort. So it's always good to check with them as well. The second piece of advice is one of those things that's a little bit easier said than done. But if you're able to make minimum payments, that's going to be one of the best ways to protect your credit. This is because payment history has one of the biggest impacts on your overall credit score. It accounts for about 35% of your overall credit, and even missing one payment can cause your score to go down by over 100 points. It's good to note that once you do miss a payment, you actually have 30 days to make it before that payment is reported late to the credit bureaus. So if you missed it but are able to make that payment before it becomes 30 days late, you may still get a late fee, but your credit is going to be protected. The third thing you can do to protect your credit doesn't directly impact it directly, but it is very useful, especially if you need to borrow money to cover expenses during the hardship, since it reducing expenses will make it much easier to bounce back afterwards. Again, I understand that this piece of advice is really easier said than done, but depending on the lifestyle, if you're able to make temporary sacrifices, it could really help you in your overall financial health long term. I want to explore this more in depth, but with that said, let's just pause and come back to this on a couple of slides. The last piece of advice is to stay away from courtesy pays. So this doesn't directly impact credit, but it is one of the most expensive forms of a loan out there, and it can be really hard to break that cycle once you get into it. It's pretty standard that courtesy pay, also known as overdraft protection or ODP, is offered on checking accounts. Essentially, when you make a purchase but don't have enough money in your account to cover it, the payment's still going to go through and it'll overdraw your bank account along with a $30 to $35 fee for each transaction. And that fee is, quite large and it can make your account go negative extremely quickly. With the cost of the fee, using courtesy pay can create this really vicious cycle of going very negative, and it makes it really hard to dig yourself out. So it's also just a wildly expensive form of borrowing. So we're going to take a look at other options you can look into that are better for your financial health. Which that brings us to borrowing during difficult times. There are many good reasons for borrowing money, and sometimes you just can't avoid it, particularly when talking about unexpected expenses or income loss. The main thing here is to avoid making emotional decisions when it comes to lending. When you use credit strategically instead of emotionally, it can save you a lot of time and money down the road. So let's dive into some strategic ways to lend during hard times. As you all know, not all loans are made equal. There are going to be different types of loans for different needs, and let's take a look at some of the options available, particularly for financial hardship. So, for best practice, I would say that borrowing from local financial institutions is ideal for their small unsecured loans as they are going to generally offer the lowest interest rates. Depending on the institution you're working with, they might have specific loans for hardship that offers reduced rates. Uh, Lending policies will vary place to place, so it is just best to do your own research on what options are available in your area so you can find and connect with a lender that will work with you on whatever that need may be. I do want to note here that if you're already working with the financial institution, especially at a local level, sometimes it feels hard or even embarrassing to go to them while you're struggling. And I just want to say that as a local financial institution, they truly do care about their community, and we just want to help. It's what we do. We help people in similar situations all the time. That's our jobs, and we're not going to ever judge you for asking for help. So don't feel afraid to go to them. The second category is the caution zone. So that's going to highlight using credit cards and borrowing from retirement to help bridge the gap to cover expenses during times of need. So credit cards are going to have pretty high interest rates. Usually the average credit card interest rate out there is 25%. So that's pretty high for a loan. And they also promote the cycle of debt because they are a revolving form of credit. But they are also one of the most convenient forms of borrowing, especially when you need money quickly. So, one issue with credit cards is that leaving a balance can negatively impact you due to credit utilization. If we go back to look at this graph here, it is actually the second largest factor of your credit score and accounts for about 35 or 30% of it. So that's definitely something when you max out a credit card, then it can have a really big impact sometimes, even that 100 point mark. So just something to keep in mind there when thinking about using a loan during a time of need. But going back to opening like a new credit card, they sometimes have a 0% introductory period. So that allows you to keep a balance on the card without paying anything in interest. It still might negatively impact your credit, especially if opening up a new trade line, but at least you won't be paying anything to borrow that money. And that's just one of the strategic ways that you can use credit cards in a way that'll reduce the total cost of the debt that you're taking out. When you're back on your feet, you can also look at balance transfer options, which we're going to get into a little bit more towards the end of the presentation. Borrowing from retirement really depends on the type of plan you have, on whether that makes sense or not. Most plans will have like a hardship option where you can take out money from retirement when you are going through something that qualifies as a hardship. And in this situation, you're going to have to pay income tax on any funds you take out. It can also have other repercussions, though. So I would either work with your HR or work to kind of discuss that more in depth, or even maybe your financial advisor. If your plan offers 401k loans, the interest is going to go back to yourself and you don't have to pay income tax on that since it's just a loan. And that could be a good option to look into. Either way, I would recommend just meeting with a financial advisor or an investment professional to explore the pros and cons of each of these options, especially if you're getting closer to retirement. Lastly, the loans you want to avoid are predatory lending and payday loans. they can you can identify these loans by the types of language that they're using in advertising and on their website. Normally, they're going to say things like quick cash fast or instant approval or no credit checks. And they may or may not be reported to the credit bureaus, but the biggest disadvantage of using these services is that they tend to come with extremely high interest rates and fees. We're going to look at a real example of this in a couple of slides, but I want to finish by just noting that the extreme cost of these options can really, you know, be detrimental to your overall financial health and cost you thousands and thousands of dollars and keep you in a financial distress for a long time after the hardship. So, um, we'll definitely take a look at that example soon here. But for this one, let's take a look at the visual example of how much interest rates can impact you both short and long term. So let's look at the differences between a credit union loan and a 28% credit card. The first loan shows someone borrowing $1,000 at 10.9 for 2 years. Their monthly payment is that $47 a month. And the gold here shows how much of the payment is going towards the loan balance, whereas this little gray part shows how much interest that they'll pay over the course of the loan. In this example, they paid a total of $117 in order to borrow the initial amount of 1,000. Now, the second pie chart shows someone borrowing that same $1,000, but making the minimum payments on a 28% credit card. Their monthly payments are lower than the credit union loan, and that's only going to cost them $27 per month if they're just making the minimum payment. But if they continue to only make the minimum payment, it would continue or it would take more than 6 years to pay off, and they're going to pay over $1,290 in interest, which is about 11 times the interest paid in the first example. Again, you're going to pay less interest by making more than the minimum payment, but what commonly happens with credit cards is that people will struggle to pay it off because they'll make a payment and then something else is added to that credit card balance. So it's a really difficult cycle, again, to break, but we're going to explore other strategies later on for that. Now let's get back to the predatory lending. This is actually a real loan one of our lenders helped a member get out of, and the interest rate was a whopping 724%. This is absolutely outrageous. This is crazy. And only borrowing $500 in this example, the member was actually set to pay more than $2,200 over the life of the loan. And here's the same chart where this is the original $500 balance, and this is everything that went towards interest. That is just an astronomical amount. And that kind of interest rate is absolutely insane. And a lot of times, even if you are going through a time of crisis or hardship, it's going to do much more harm than good in times of financial distress, which is why we recommend staying away from both predatory lending, payday loans, as if at all possible. So now let's explore creating a temporary budget and how to prioritize bills and expenses during times of hardship. I will say that values are going to drive your priorities. So if your priorities don't look like this pie chart or pyramid specifically, that is totally okay. But with that said, let's just get into kind of an overview of this hierarchy of expenses. So the basic need is the foundation of our pyramid that covers all of your essentials that you need to live. So food, housing, transportation, shelter, all of the things that are, just your basic needs to live off of. Then there's the safety need. This is all of the required expenses coming out of your budget. So that's minimum debt payments, maybe taxes, child support, all of the things that are kind of required of you to pay on a monthly basis. Then we get into autonomy. So that's going to be things that set your future self up for success. So savings, investing, education, extra debt payments, all of those fall into that category here. Uh, the second highest to the top on this pyramid is going to be the experience category. This is the hobbies and lifestyle expenses, the things that you value and gain happiness from. So, all of your hobbies, maybe you're into sports or things like that. Um, Pets for me would fall into this category. And then at the very top of the pyramid, just like putting your air mask on in an airplane, which is actually the analogy they used in the article that's linked below the pyramid, the advice here is to help yourself before helping others. But again, your values are going to drive your priorities, and giving may be something very important to you. A lot of times, this is kind of something we intrinsically value and hold close to us, whether that's for religious purposes, maybe you have kids or come from a big family. Right now, at the time of recording this, we're going through the holiday season, and that's naturally going to be the time of giving. So, Minnesotans actually spend an average of like $1,900 on holiday related costs. We, give a lot. We spend a lot of money on others. And when going through hardship, it's kind of up to you to figure out where to cut and prioritize. It's no one's place to tell you how not to spend money on areas you value. So, my advice here is to just create a temporary budget. First, I would recommend focusing on ways to reduce as many of your essential payments first, both in like these categories here, the foundational areas. Ideally, you continue to make minimum payments on any loans that don't temporarily pause payments, but once all of your essentials are covered, you can, if you have anything left over, that then can go towards the extra expenses that you value the most while cutting in other areas that are less important to you. Maybe that looks like pausing subscriptions, reducing eating out, or cutting back on that holiday budget. The biggest thing here is to remember that it is a temporary sacrifice, and making that or cutting back during hardship is going to help set you up for long-term financial success in the future. Again, that advice is that easier said than done. I know it's definitely not my favorite advice to give, but a temporary budget can be really helpful because it still fits, all of those essential expenses as well as the things that you are truly, valuable to you and you want to prioritize. So, if you're interested in creating a temporary budget, there is a budget template available on our website, NCCYou.com, or through our online money or online portal Money EDU. And if you'd actually like help with this step, you can also meet with a financial counselor who can help you with this. Again, no judgment. You and your values will drive your spending priorities. So now let's talk a little bit about recovery after hardship. After hardship, whether it was a income loss or major expense, there are many options available to you for coming up with a plan in getting out of debt and back on your feet. I always recommend starting with financial counseling as an initial step, as it does help you come up with a personalized action plan. They will do cost benefit analysis on the different options you have in your situation so you can really explore in depth the different roads that you can take for getting out of it. I'd also recommend that you prioritize your emergency savings as soon as you're able. Even if you've accrued more debt during the hardship, it's going to prevent you from taking out more debt if something comes up while you're recovering. So definitely prioritize that. The next couple of options do involve debt management strategies themselves. Consolidation and 0% balance transfers can both be good ways to reduce the cost of debt and even shave off months or years in repayment. It does depend on your overall financial situation in determining which option is best for you. If you have questions about regarding how this would fit into your plan, again, a counselor is a great start there, and they can do a cost benefit analysis on that. Another great way to tackle debt, especially if you don't qualify for that traditional loan or you have a lot of different loans that are hard to keep track of, is using a debt management plan. That said, there are also many companies that offer debt relief that's not reputable to work with, and they're going to do much more harm than good. So let's spend a minute going through the differences. Again, this is a really great way to tackle debt. If you don't qualify for a traditional loan or you have a lot of different loans to keep track of, a debt management company can really help, reduce your payments and help you build credit, get back on track, and debt payoff plans. That said, these differences, debt relief companies are very, very similar to debt management companies out there. And a lot of times, what they offer is kind of too good to be true. So, a lot of times, the language they use is like instant credit boost or that they're going to cut your debt in half. Normally, there's going to be large fees associated with this service, and they don't offer counseling or education to their customers. When working with a debt relief company, you select the debts you want to include in the plan and then make one payment towards that company. They're going to let everything go to collections oftentimes rather than making monthly payments on your behalf. And that makes it easier for them to negotiate settlements with the credit cards or creditors. They're able to cut that debt down for you, but it's also detrimental to your credit. And between that and high fees for this service, I would say it's best to steer clear because there is a much better option, which is the debt management companies. They are nonprofit companies and they offer the service and it's going to cost you a lot less. Similar to debt relief, you select the accounts you want to include in the plan and make one payment to them, but they then make the monthly payments on your behalf. So that's going to reduce the judgments and collections that you would see in a traditional debt relief company, but you still get all of the benefits of one payment, potentially lower interest rates, and they'll still try to work with you on settling, any current collections that you had already had going into the plan. They also do strive to educate their clients and offer those counseling services. So, when you look between the two, they're going to look pretty similar, and sometimes it is really hard to distinguish between them. I will say that LSS is a reputable nonprofit in our area that offers debt management plans. They have offices all around Minnesota. So, if anyone is in that situation and they would like more information, I would just check out the LSS website to learn more. As we get closer to the end of our presentation, I do want to take a minute to talk about ways to build financial resilience into the future. First, prioritizing emergency savings is going to be one of the best ways to feel comfortable financially and not having to rely on debt if something comes up or in times of need. This is going to be really helpful as you get back on your feet and then protecting yourself into the future. Even transferring like a small amount into savings will help create that cushion. And one of the easiest ways to do that is by utilizing automatic transfers so you don't even have to think about it. One of the easiest ways to set up this up is through your work. So you can contact HR or whoever's in charge of payroll, and they can allocate a percentage to go directly to savings for you. And the mentality behind this is like what you don't see, what you won't miss. If a percentage is taken directly out of your paycheck, like the other deductions for tax or health or retirement, typically you're not going to miss that. And then when it comes to being proactive, we mainly just mean that financial planning during times of stability leads to lower stress and more options during hardship. So you can always meet with a financial counselor or advisor. People like us are always here and willing to help meet with you. We can also do things like create a budget or allocate more towards savings or debt when you can. So all of those recommended to just kind of do towards or during times of stability. Also, having a plan for your debt is very, very helpful, and particularly because, as you've seen in the examples, being strategic can save you thousands of dollars and shave years off the life of the loan. Whether or not you have a lot of debt, I do recommend that you monitor your credit through a reputable source. So either through an app like Credit Karma, the credit bureaus themselves, or annualcreditreport.gov. It should always give you free access to your credit, and just make sure you don't give out sensitive information to a random service online. Lastly, goals are one of the most important things you can do for your overall financial health, especially when you use a format like the SMART goal acronym. You're not just creating a goal, but a roadmap for how to get there. Since you're 42% more likely to achieve a goal when you write them down, we've actually linked the SMART goal sheet that you can download on our website. So make sure to check that out as well. Finally, as we end the presentation, I did just want to list these resources again. If you are currently struggling, I highly encourage you to use that community resource finder by either scanning the QR code or going to that resource.findhelp.com. You're going to just enter in that zip code and see all of the resources available within your community. And then you can sort it again, food, housing, pretty much, there's so many different categories that you can help and explore different programs for. So, with all of that, that concludes our presentation for today. Thank you so much for tuning in, and please don't hesitate to reach out, especially if you are in need, because we are here to help, and we want you to know you're not alone. So, thank you.